stock account has earned $313. Republicans suspended debt ceiling talks. U.S. stocks closed lower on Friday. Mr. Powell said U.S. inflation is well above the 2% target, given that credit pressure may not need to raise the interest rates. In my account today I've gained $193, which is a gain of 0.26%. The net asset in my account is $74,050.45. Today, SQQQ rose for 0.71% to $25.56. United Natural Gas decreased for 0.27% to $7.46, and the SPXU after its rise for 0.39%. I have sold all of my position. So in the market today, market generally closed a little lower. Dow Jones Industrial Average closed down 0.33%, Nasdaq Composite closed down 0.24%, and S&P 500 closed down 0.14%. The industries closed mixed. Internet retail closed down 1.66%. The financial market closed down 0.53%. The biotechnology market closed up 1.09%. Oil and gas closed up 1.16%. The auto industry closed up 1.03%. Republican negotiators temporarily withdrew the debt ceiling talks, raising doubts that the debt could be reached soon. Fed Chairman Colin Powell said it may not be necessary to continue raising interest rates, saying that tighter credit conditions could mean a peak drop in the policy rates. Investors are watching the progress of the U.S. debt ceiling talks. Republican negotiators temporarily withdrew the debt ceiling talks on Friday. Representative Garrett Graves called the White House negotiating team unreasonable. We don't sit here and talk to ourselves. Mr. President Joe Biden told his negotiating team early Friday that he believes that Congress would take action in time to avoid a default on debt, White House officials said Friday. House Speaker McCarthy and the Senate Majority Leader Charles Schumer said are planning to vote on a bipartisan agreement in the coming days. On Thursday, House Speaker John McCarthy said a debt ceiling deal could be reached next week. Government debt crisis is looming in the U.S., and the Biden administration is warning through the public and private channels about consequences of a default and also risk of a last-minute deal. Treasury Secretary Janet Yellen warned U.S. bankers on Thursday that a debt default would have an impact beyond the financial system. Bridgewater founder Ray Dalio wrote that while he expects the debate over raising the debt ceiling to default, it will be resolved quickly. No agreement would really promise to reduce the deficit in the next few years, which will lead to more trouble. Analysts at BMO Wealth Management said there is some uncertainty about when government funds will run out and when it will default, but in the long run the final result will not do as much damage to the market. Markets continue to focus on the Fed's monetary policy outlook. Fed Chairman Jerome Powell said on Friday that the U.S. inflation was well above the 2% target, given that the credit pressures may not need to continue raising interest rates. He stressed that the U.S. inflation is well above the 2% target, and that the failure to fight inflation could be a long time. He said that the FOMC was strongly committed to its commitment to return inflation to the target of 2%, and that the price stability was the foundation for keeping the economy strong. Mr. Powell said, "We have made a lot of progress in the policy tightening, and the policy stance is restrictive. We face uncertainty about the lag effect of tightening so far and the extent of the credit crunch caused by recent pressures on the banking sector. So far, we have the conditions to look at the data and changing outlook with a careful evaluation. While the financial stability instrument helped calm the banking sector, on the other hand, the developments led to tighter credit conditions could weigh on growth, employment, and inflation. Therefore, our policy may not need to raise to the target we hope to achieve when this does not occur. Of course, there is a high degree of uncertainty about its degree." The Fed raised its benchmark interest rate by another 25 basis points to 5% to 5.25% earlier this month, suggesting that a possible pause ahead. The next rate-setting meeting will be held on June 13th to 14th. CE's Fed Watch tool says the market now expects a 36% chance of a 25 basis point rate hike when it meets next month, compared with 10% a week ago. Mr. Powell stressed that the U.S. inflation is well above the 2% target. But he went on to issue a dovish signal saying, given the credit pressures, we may not need to continue raising interest rates at such high level. During the Powell speech, the U.S. stock index narrowed its gains significantly to turn lower across the board, with the Dow erasing more than 110 points. The Nasdaq and S&P 500 and the Russell small cap stocks erased 0.3%, 0.3%, and 0.9% respectively. This is mainly because the U.S. debt ceiling talks have highlighted negative setbacks, with Republican debt negotiators pulling out, saying the White House appeared irrational in the process. Treasury prices recovered losses and yields retreated. The latest Fed rate swap tool showed the chances of a cut FOMC rate hike in June to less than 17%, the possibility of a temporary move rising to 83%, largely due to a standoff over the Biden administration debt ceiling talks with the Congress. The market now has been divided over the Fed's next move. Future pricing Friday morning show a further 25 basis point rate hike in June at about 35%, significantly higher than the near zero probability after the May meeting. A number of Fed officials have also recently suggested a mixed interest rate path. Both Dallas and Cleveland Fed president are more inclined to keep raising interest rates, while the Chicago and Atlanta Fed president want to take a more cautious approach amid soaring uncertainty. Mr. Powell also said we are certainly likely to see continued supply chain shocks, not knowing the stubbornness of the supply shock. Inflation issues, labor slack will be even more important. Inflation could respond more quickly to changes in the labor market. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.